Bitcoin. You want to learn why Bitcoin's important? You want to learn why Bitcoin is going to be the only way that you preserve wealth? You can go to adoption.io and subscribe to our free newsletter.
The Bitcoin.
And get updates of Bitcoin education, Bitcoin tutorials, for everything Bitcoin here. It's our goal to teach you how to adopt Bitcoin today. Today, I'm very lucky. Got my boy Jack here. Jack's another one of the guys here in state and where we're at in the region that is big into crypto. He's a big Bitcoin guy. He's a technical analysis guy. Knows the charts, knows the fundamental analysis. Called the bottom at 3,800. Literally texted me at like 10:30 at night. He's like, that's it. Bought, bounced right up to 4,500 right at the bottom, dude.
That was a crazy night.
I hyped you up right after that experience too. But like we've been telling people here at Adoption to, buy the whole time.
Yep.
Dollar cost average, stack sats.
Yeah.
Talk about stack sats. Talked about the Fold app, how to do it that way with Bitcoin Cashback. I know you know a lot about how to stack sats passively. So one of the things that's kind of getting popular right now is the problem is there's some people that have Bitcoin and it's just sitting there, right? It's not making money.
Exactly. Yeah.
And they want a safe way to do something with it, but to get a return on that. And a lot of the interest accounts that we see are big on that. And I know that you follow a lot of that stuff. But why don't you just give a quick intro about yourself too, and then we'll get into it, bro.
So yeah,
sorry, I jumped the gun.
I'm Jack. I got into Bitcoin 2017 with like the run up, like everyone else did for the most part. Couldn't say I made a lot of money, to be honest. I actually learned a lot of valuable lessons during that time. Kind of just chasing the latest and greatest coin, getting wrecked in the IPO phase. While still buying Bitcoin.
ICOs.
Yeah, but buying Bitcoin at prices that we haven't seen since then.
Yep.
Luckily, it was a small amount, but, it still hurt. But it's kind of the idea of you need to learn those lessons when it comes to investing. And if you don't make those things when you're buying, make those mistakes when you're buying stocks, you got to make it somewhere. You have to learn. Mm-hmm. So I mostly learned a lot of my mistakes there. So I've been actively dollar cost averaging since 2017. I was actively trading a little bit between then. Didn't really find a lot of profit out of it. I made a couple of good trades, but for the most part, I was losing Bitcoin in Bitcoin terms, especially if I was trading like Ethereum, Litecoin, Stellar, EOS.
So you would like trade into something else?
Yeah, I would trade in on TA. No reason why it's going to move up just on the technical analysis standpoint. Sometimes it worked, sometimes it didn't. I got into Kraken a little bit. I was shorting, using a little bit of leverage as well. Made a few good trades there, but all in all, it was a lot more risk than I needed to. And at the end of the day, I started really just dialing in on like the dollar cost average standpoint. Yeah. And so that's where I am today. So I had a lot of low bids when we made the low. I think it was in 2019. I had a lot of kind of money on the side, ready to buy in. So I kind of had the thesis of where we were going.
Was that the 3,800 dip?
No. That was like when we made the 32. So I basically got majority filled there. And I've just been buying ever since. Like at this point, I could say that I am basically irresponsibly long. So I don't like the current system as to 401ks and all that. And if you believe in it, you want exposure to it. So I've leveraged up my 401k twice to go long.
One of the things that I've been trying to tell people is a dollar cost average.
Yeah.
Stack sats and dollar cost average. Don't try to beat the market. Just dollar cost average and buy every day. Stack them that way. Don't try to play the market unless you're like him, and then you can call it at 3,200 or 3,800. But seriously though, but this is why that these Swan Bitcoin's one. That's why these apps are being created now to help people that aren't like average. They're average investors. They don't really know what to do, and it's the best way to save. That's a 401k way. That's the retirement savings account way.
Yeah, I mean, at the end of the day, I wish I listened to myself more in terms of calling the bottoms and having money ready to buy said bottoms. Mm-hmm. So when I was telling you that, in March, that 3,800 dip, I was almost out of money. I couldn't act on it.
Yeah.
Which kind of sucks. But then again, I still had some good opportunities to dollar cost average. And since then, I've kind of looked to earn an additional return on that. And so I found through Twitter, BlockFi being one of the reputable interest-bearing accounts on your crypto. So I have a small portion of my portfolio in BlockFi. There's still risk involved, obviously, with it because you are lending your Bitcoin. And when you lend your Bitcoin, it is not your Bitcoin anymore, even though you lent it. You know, we don't have those regulations like we have in the banking sector right now. So there is additional risk than you can even imagine just by lending it and having the whoever receives the funds default and you not get your funds back. So
can you explain what BlockFi is for people?
BlockFi is a place to buy Bitcoin. You can buy it through direct deposit from your bank account. And they are built on, I believe, the Gemini stablecoin, which is the 1-to-1 peg for the US dollar. So right now they're offering 6% return annually, compounded monthly on your Bitcoin, and up to 8.6 on your GUSD, which is the Gemini USD. So that alone is the incentive in itself. So you can passively earn Bitcoin in Bitcoin, not in dollars, in Bitcoin. Or you could, say, put a savings in a stable coin, which if you believe in the stable coins, you can earn 8.6%, which I don't think you've been able to earn 8.6%.
Stable coins, for like stable coins being a digital representation of the physical currency that we have today. Yes. So USD coin, Tether, these are examples. When you see one Tether or one USD coin, that means that there's $1 equivalent in a bank account somewhere. But stable coins are a way for people to onboard.
Yeah.
And this is what we're hearing with DeFi now, right? Decentralized finance. You know, it seems like it's there, but it's just for people to understand as well. Like, there's two sides. There's the buy and hold, or there's the buy and, okay, like regular finance right now, I can lend, which micro lending is big in Bitcoin right now. That's very new. So, like, I feel like this was going to come about anyways. So it's important to know about it.
Besides, like, the interest-bearing account that they have, it is, like, you'll naturally earn interest if you leave it there. So they will lend your money if it is sitting there. So I wouldn't call it more or less a savings account because there is risk involved. Right. And I have to say, I haven't pulled my money out of it yet, but, you know, reputable people like Pomp have talked about it. He's invested in it with his Morgan Creek Digital.
Yep.
They did like the Series C for $50 million. So there's a lot of money going into this, and their revenues are absolutely exploding. So I have a lot of trust in that, but because of just the risk involved and the potential miss of the upside just on the price appreciation, it should only be, in my opinion, like a small percentage of your portfolio. But
in the DeFi, in like the loan account kind of
thing.
Yeah. So you got your savings account in your Bitcoin, your BTC.
So
your you know, and then you got your 2 to 3 to 4% or a small percentage in your loan account, your lending. It's like a money market account right now.
Exactly. Yeah. So like also you can put your Bitcoin up as collateral with them and receive a loan at 50% face value. Okay. So it will be collateralized. If it does drop, then you will have to put up more Bitcoin. But it is a good way to get cash without selling. Like that is like the purpose of it. So they're doing the things that kind of modern banks begin to do, but there's still, you know, a lot of changes into that. And one of the biggest things that I'm actually interested in is the credit card that they're supposedly coming out with. So it's not a debit card. You don't need to have Bitcoin on it or cash in it. It is a credit card where you will be able to earn competitive percentages to US dollars. Bitcoin as your reward program. That hasn't come out yet. I don't think they're going to do that by the end of the year. But like that is where I'm really interested in because
BlockFi.com, right? BlockFi.com.
Yeah, so you'll be able to just continue stacking by doing your day-to-day purchases. Perfect. And they allow you to basically hold your own keys as well. You know, you can take it off, and you know there's really no strings attached with it. So that is one of the big things I'm really excited in terms of where the future is going.
There we go.
In terms of like other stacking sites, like I know you talked about Swan, but they got a big name. But
they do.
I think you can only do recurring purchases.
Oh, there we
are. They don't let individual purchases yet. But
my Wi-Fi. There we are. Wealth management. There we go. All right. I didn't put the. We're going to put the link. I'm going to make sure I put the link in the comments after this. So you can find the link in the comments after this. You'll see a bunch of links right there right now, but we'll put a link to BlockFi in the comments there. But it's important to know, though, because like the interest-bearing accounts, it's important to know because people don't get sucked into it. Like, we know that one of the problems during the last bull market in 2017 was the whole BitConnect incident, right?
Yeah.
Bitcoin.
IPOs in general, just the shit coins, as Max Kaiser says, the shit coins were made to take your Bitcoins.
Yep.
And because you have to spend your Bitcoins to buy the shit coins, that's kind of what has happened. So
yeah. But BlockFi, credible.
I've kind of moved towards this like semi-maximalist position. Like I still believe in ETH, but not as a sound money standpoint. I believe that it's going to be some protocol in the future that will have immense value. To the side of it, who knows how many coins will exist in the future.
Yep.
There's a lot of things going for it, but a lot of things that aren't going for it. And that's why small percentage in ETH. And then a little bit of Monero too.
Yeah. Well, privacy we know is undervalued. Layer 2 Bitcoin.
Yep.
There's more privacy coming in that. We know it's an issue, but I believe that'll be fixed. So, all important stuff though.
Yeah.
Another thing that we'll do real quick too. We're gonna take a break. We're going to the charts real quick. We usually do this when I pump on. I don't like to talk much about price, but we do have to go to the charts. Just a reminder as well, if you want to subscribe for free to our free email newsletter to get all these awesome Bitcoin updates, you can go to adoptbitcoin.com or adoption.io, which you'll find right there down below. But quick price update, as we're talking about prices are going to be the next thing we're going to talk about. Here we are.
Price is crazy.
Looking out from, I don't want to buy your ads, so this, I have to zoom out for people now, just so they remember the run up in 2017. You gotta put it on log scale,
I think, Joe.
But all right, yeah, you're right.
Bottom right corner.
Bottom right corner. There we are. There we are.
That's a little better looking chart.
Yeah, there we are.
And it makes more sense.
So 2018 top for those of you that are watching the dollar right now, and Jerome Powell telling us that inflation's coming. This is a hedge against that dollar. But so you see it, prices at 11,400. Again, trend is our friend, and looks like we're going through the next growth phase, which leads us to Raoul Pal too. This is one that I know you wanted to talk about.
Yeah, so
I've
seen a couple people talk about this, but this is basically what's going on in the S&P right now, and it's really a representation of kind of what the world has been experiencing for a lot longer than the last couple of years. You could at least say till 2008, but the system has really changed dramatically coming off the gold standard and even before that. But so this chart really shows, they're calling it the megaphone chart, but it's really a visual representation of the Cantillon effect.
And this is of the S&P 500, right?
Yeah,
so this
that is the S&P.
So this is the index future. So what that means for those of you that aren't maybe don't know is that the futures it's a whole separate market where you can essentially bet ahead of time on a certain index or something.
The pajama traders.
So that leads typically market trend because they bet in the futures. So this is the futures of the S&P 500, and you'll see here in December 2018, which Jack, I know you talked about. That was the first slide that we had seen in this channel.
Yeah. So basically, the Fed cut or raised rates too quickly. And it was really putting a strain on business because if you think about it in interest terms, if you go from, say, 0.25% to 0.75%, you theoretically tripled someone's interest payment. Even though you're only going up 50 basis points, you've tripled the payment that is required, and that put a lot of strain on businesses. And so the Fed quickly lowered rates from there as we've gotten to basically zero.
So December 2018, if everyone remembers, that's when the market slid 20% in that 1 month. That was also the last time that the Fed was attempting to raise rates because they came off 0% and they were raising rates to try to normalize. And then that's when the slide happened. That's when we started to see the liquidity crunches. Yep. And then that's the last time that they were raising. And then we rebounded, right?
I think another good point, too, is the top before that pullback. I think it was Q3 2018. That was peak US GDP. And since then, we have not been anywhere near there, obviously. Not now during the coronavirus. But I think it's to the point of the chart in that right now what we're seeing in price is purely currency manipulation and interest rate manipulation. 100%. You could clearly see the rebound from the lows in 2018 solely because of the interest rates.
Yep.
And then we reached a point for the coronavirus where we
Right
dumped. Probably it was one of the worst dumps we've ever seen in stock history. I mean,
I think it's proven.
it was
now.
crazy waking up every day seeing limit down, and then you're saying, is it going to hit 25%? I think the worst we got was 14%. And
The charts get the markets get triggered.
exactly, and then the Fed dumped what, $3 trillion
Yep.
in almost immediately, and
the bounce now.
we haven't seen any pullback since. But we're hitting that upper trend line, and if the trend is going to hold, we're going to probably see another liquidity crunch.
Yeah.
And I believe that the liquidity crunch could be from the euro dollar funding. So that would be basically all the dollars that are required to make payment outside of the United States. But you are seeing the swap lines being utilized, and that is a loan, and they are being repaid back. So that kind of gives hope that that idea could be dead in terms of that the liquidity crunch will become international. I think it's more likely to be a liquidity crunch because of politics. As you can see, we only had one round of stimulus, and they're arguing right now, $1 trillion or $3 trillion. They're not meeting at two.
Yeah.
Conservatives want one, Dems want three, and they're not coming to an agreement. And who gets hurt? We do. Like, the people that need the money the most are the ones who get hurt the most. And it's crazy that we're talking $1 to $3 trillion when not too long ago $1 trillion was a lot, and now $3 trillion seems like children's play.
Well, one thing that isn't talked about a lot is the fact that last September the Fed had started the quantitative easing. It was in the repo markets.
Yep.
But this brings us to a good point: is that the Fed. Jerome Powell has now told us that the interest rates. There's no floor. Floor. The inflation, there's no ceiling. We're going to try for the interest, but and inflation is the creation of money. It means your dollars today, look in your bank account, take out the cash in your wallet, look at it, and then look at that, and next year, that's going to be worth less, and that's going to be worth less because they're creating money faster than they've ever created money. Yes. So your cash in dollars is losing value the fastest it's ever lost value. This is why this is important. We got this guy here trying to tell us about Bitcoin and also interest rates, how you can make more on that, and your cash is losing money. It makes sense though on why the Fed is rushing to get this digital dollar out. One thing that we've seen is primarily, especially with China, with the yuan, like the new central bank digital currencies. So the race is there. I try to tell people that the argument of the days where it's not is over. I mean, you either get on board and game theory kicks in with Bitcoin, or you don't. And nation states are now reserve. I mean, they're trying to create this stuff.
It's inevitable at this point that we'll be in a digital dollar. I don't know what time frame they are. Who knows if they're working on it, but it's definitely the future. I mean, if we want to stay competitive with China, they're already doing it. So we have to do it. And if you really think about it from that standpoint, like, you can access, it allows people, say, in Africa to access dollars because it's digital. There is no friction of the internet anymore. So you have a much larger potential market cap. I mean, a lot of well-known people in the space all kind of agree that we're going there. It's just how we get there. Some people say it's just going to be out of slow process of exchanging the dollars.
Yeah.
But the other theory is that, with the coronavirus, we might see the crunch on the banks, even though the banks, lending has changed and all of that has changed since 2008. That really isn't where the problem is anymore, for the most part.
No, but this is an important topic to dig onto because, like we've talked before this, that, there's this theory out there that the Fed's going to let the banks fail this time.
Yeah, that is the theory, is that you basically are forced into buying this digital dollar because your local bank fails and you cannot withdraw your money anymore. And the Fed says, hey, we'll give you a one-to-one representation of your deposited dollar for our digital currency. And by doing that, you basically allow the deleveraging process to occur through the banks. So the banks lose everything. I
Yeah.
mean, they're going to be the ones that take the hit. And instead of bailing them out, like they can't bail them out anymore. The Fed will be coming into question if they do it. Like 2008 was bad enough. The Fed will be in question if they do it again. And there's just a massive credit risk on the dollar if that happens. So they're not gonna bail out the banks this time if that is where the failure happens. And I think the repo market kind of says that there's something going on here. The pipe's broke, but we haven't really seen it happen. So I think what's scary is that by putting it in a digital dollar, they can put negative interest rates on people because you can't pull your dollar out anymore for a physical piece of paper to prevent yourself from accruing those negative rates. So I don't really like that in terms of the liberties of the people and the rights, and it is kind of like property and infringement of rights.
So this is a good question because like in negative interest rates right now, we've never seen it in 5,000 years of recorded history.
No.
What is your definition of negative interest rates, and where do you think that leads us?
I mean, theoretically, in terms of lending, if the interest rate is zero, intrinsically the value of money is zero because that's what an interest rate is. It's the value to have money. So you're paying some price to get money. So if it's negative, that really screams deflation because that means there's just so much credit and so much money that money has no value. And I really think it's just negative interest rates only exist to keep real rates positive because you have deflation. If you don't know what a real rate is, it's your said interest rate minus inflation. If inflation is negative, you have deflation. So the only way to offset that positive rate, because deflation makes it harder to lend, the only way to offset that is by going negative. So you're taking a negative number and then you're adding a positive number to keep interest rates low, which the government has to do. We saw if rates go up, we'll have another 2018 scenario.
Yeah. Well, we know in Europe this has happened. They started by doing the bail-ins.
Europe is a whole different mess. I don't really pay much attention to Europe because I think just paying attention to the United States is hard enough, personally. And I think that's where the market, you really have to understand the FX market, and that's just not, I don't have enough time to really deeply understand what's going on in Europe. But I think what is really important to understand is that with like the negative interest rates and where we're going, it's not like a good outcome. It really is going to drive the wealth inequality even higher. Like the QE and all these things, they're driving the wealth inequality even higher. So like with the protests, you're seeing a lot of it is racial tensions, but it's also, you see a lot of eat the rich signs, and people are really pissed off that they're basically working harder than these other people, and these rich people just say, oh, you need to work harder. It's like, no, you have money. You don't need to work hard at all because you have money. And so that's going to drive the wealth inequality to an extreme that I don't think we want to see. And like Ray Dalio has put it, you really see populism with the wealth inequality. And I think it's just no coincidence that we are here politically and we have the wealth inequality approaching the 1930s levels. And I think the important part of this is, as we need most people think, the Fed is calling for more QE. Everyone is calling for more QE. As it gets colder, these restaurants are going to be cut in half in terms of their capacity. People are going to need money again, and the Fed can't fix a solvency issue. They can only fix a liquidity issue. They can pump money in, but they can't keep cash flows going. That's from Congress. And so really what they're going to do is by buying treasury bills, which is increasing the collateral, which allows banks to lend more, which ultimately drives the wealth gap even further. So you're going to see asset price inflation, and if you get and that's going to be a whole mess. And to offset that, likely we'll see UBI, which we've already seen one payment.
Yeah. Now, but like, so one thing that we try to do is like, I've been trying to explain to people that, like, number one, this is happening. Number two, there's an exit. It's Bitcoin.
It is Bitcoin. It is gold as well.
It is gold as well.
Just something hard, a hard asset that you own.
It is. So you have an escape, but we're talking about all this. But like, for the average person, then like, they need to know that prices are probably going to go up in goods and services if we see that normal rate of inflation. We don't know what the hell this digital dollar experiment is going to be, but there's an opportunity here. There's a unique opportunity right now where you can front run the system. You can be your own bank.
You can front run the hedge funds.
You can front run the hedge funds. You can take advantage of this transfer that's going to happen because you want to do it for yourself. You want to do it for people that you care about. And the fact is that everyone knows about the wealth inequality, the interest rate apartheid, the fact that the top 0.01%, the 10% of the wealth of this country controls the same wealth as the bottom 90%. So just let that be known. But there's an exit here, and what do they need to know as an if I'm a person that just is looking for the next move here,
Just dollar cost average. Get involved. Just get some, even if it's 1%. I think it will greatly change your portfolio if you even have a portfolio. It will definitely change your life. It will change your mindset onto kind of what's going on. And I think before we kind of get off the Fed, I think one important point is that if we do see UBI, that is going to be money at the bottom level of the economy. And the velocity of money really drives the inflation rate, specifically of goods and services the essentials. Because, so if you have inflation going up, you're going to see bonds selling off because interest rates will have to rise in accordance with that. Because, if you're earning 1% and you have 4% inflation, you're losing 3% on a real basis. So people will be selling bonds to kind of offset that inflation. The problem is with the interest rates going up, that is the interest rates in treasuries that the Federal Reserve has to pay, which we know we have, what 26 trillion now? Is it 26?
Yeah.
We have $26 trillion of debt. What is the interest rate on that payment of debt? That's a lot.
Yeah.
And we're not producing anything. So how are they going to keep those interest rates low? They're going to buy treasuries again. So they're going to do UBI, raises inflation. That's the expected outcome, at least. We don't really know because we haven't really seen UBI in the current age. So it'll possibly raise inflation. Fed needs to buy treasuries again, which will lower the interest rates and will further drive the wealth inequality and further drive the need for more inflation. So it's feeding on itself when the answer is austerity, which that will not get you reelected. And that creates, a negative bias towards your own currency and jobs. It's going to drive jobs away, and it's going to push people out of the currency. So, and you don't get paid to do that. China decides to keep printing. Anyone in Europe decides to keep printing, and we choose austerity. We lose. So it is a legitimate race to the bottom, and the bottom is not very pretty. Either way, you got like a nuclear Holocaust type depression where it's deflation everywhere, no one has anything, or we get hyperinflation. I don't really know which one is worse. And I don't know when we get to hyperinflation. I think if you ask most fund managers or anyone, from the interviews that I hear, they all agree that inflation is coming, but the answer is when. And for most of these people, they don't get paid to be the first one out the door. They get paid to be the last one out the door. You don't make your money.
By the time you hear about it on CNBC or Rachel Maddow or Ben Shapiro or Savannah Guthrie's talking about it, it's too late.
Exactly.
That's a reality check.
So I think I try to talk about inflation with some of my friends, and it's like I feel like I sound like a broken record, but at the same time, I don't think people fully understand what it is and why it's bad and why the Fed needs it. The Fed obviously needs it because it's an extraction of wealth via inflation. So we wouldn't be able to fund our operations as the United States in a sound money environment in the current form. And I don't know, was it it might have been Greenspan. One of the Fed chairman said that exact quote. And So people say, oh, inflation doesn't exist because it's been so low.
Yeah.
Like when our parents were growing up, they had, I think, interest rates were at 18%. I don't know what inflation was at, but it was high. They had the opportunity of lifestyle.
Volcker had raised
You bought
rates
bonds,
to,
you
yeah.
bought real estate, you bought stocks. Over 40 years, you won. And going back to inflation, you know, we've reached the end cycle. Like we're at the end. Interest rates are zero. The stock market is at an all-time high. We have unemployment at an all-time high. And to say that inflation is not coming because it hasn't been here for 40 years, I think is wrong. And with the amount of money that is being created and the amount of wealth that's being stolen is insane. And so I came across this article by Robert Breedlove, who's a huge guy in Bitcoin. I definitely highly recommend any of his work. Definitely
pull him up.
Definitely at the higher end of the spectrum.
Is he on Twitter?
He is on Twitter. He does a lot of podcasts. He runs a hedge fund. But I think his work is probably the most philosophical of Bitcoin. And he wrote an article.
Digital Galaxy.
Yeah. I can't remember the exact...
We're going to shout him out. Robert Breedlove.
Breedlove. Yeah.
All right, Robert.
So one of the crazy things that he talked about in one of these last reports that I listened to kind of puts inflation in slavery context. And slavery is obviously still a touchy subject with, you know, the black community. And rightly so. I mean...
Well, the world, right?
The whole world. It's existed.
Everyone is there. Yeah.
But the problem is we still have it, and people don't understand that. And so he kind of ran the numbers on it. And over the history of, I think it was 365 years, through the I think it's the transatlantic slave trade, 12.5 million people were sold into slavery. That was offspring, whatever. So if you do the math, 40 years at 500 hours a year per slave, slavery stole 2.5 trillion hours, human hours, over 365 years. If you run the rough math, that's what he kind of came up with, or $6.8 billion a year. The Federal Reserve, through inflation, assuming 2,000 hours per year, so 3,000 hours less than the average slave works. Since 1981, we've averaged, through inflation, the average rate of inflation and the average workforce, all of that, 23.4 billion hours per year. So that is a 341% increase from the slave trade, or 11.7 million people for 40 years. So we've basically done what slavery has done in 40 years. But people don't realize that it's happening. But who is affected by it the most? The people at the bottom. The people that use the dollar the most are the most affected by it. And it kind of builds on what we're seeing with the protests today. And it's true. These people are working 40 hours and they're getting nowhere. They have no savings. They're stretched to the end. And the only thing that's really saving them is the government subsidies. And it's no fault to them. Like, they're working hard and they're getting nowhere, and it's because of this inflationary this inflationary monetary policy that we have that is stealing from everyone. But it doesn't matter if you're at the top. You're never going to lose your money if you have $1 billion.
Now this is with the fiat system, though.
Exactly.
But there is an escape here. So essentially, long story short, we know it is Giaba. We know that the boomers, right? They got in first. The baby boomers, they took advantage of the bond market and the credit market, and then we came off the gold standard, and it has been theft since by the central banks, by the Fed. But now with the creation of Bitcoin through Satoshi Nakamoto. Thank God for Satoshi, because at least we have an exit this time compared to 2007. There is an escape.
It's gold, but better. And
Paul Tudor Jones, says Bitcoin is the fastest horse to the race. What's your opinion on that?
I mean, I would agree 100%. Like, obviously, I own it. I own a little bit of gold, but not nearly in the same percentage as Bitcoin. I don't think you can beat it. And at least me, I basically remember growing up with the internet. Like I remember like the first time I got on a computer, there was dial up, and I was playing video games. And I grew up in this age of digital currencies, uh, you know, RuneScape, Minecraft, Fortnite, you name it. Digital things have value to this younger generation, which these old people cannot understand. It's really hard to understand if you didn't grow up in that era. But I think where we're going is we saw how the internet changed the world, and we saw how, say, the iPhone has changed the world. But when the iPhone came out, you didn't think, oh, Uber. You didn't think of like these, life-changing apps of, that, we didn't think of them when they first came out. We just said, oh, it's, a phone, whatever.
Yep.
And that's kind of what Bitcoin is it's more than just like a protocol. It's more than just digital gold, because it is like the arbiter of truth. Like it is the only thing in the world that is finitely scarce, verifiable. And, we talk about fake news, all that garbage of the modern day political era, media. You can go run your own Bitcoin node, sync up, and see truth. And that's the only place you can really verify it at this point. And I think people have been trying to find that for years. And it's like, you could argue that we have never had true capitalism until Bitcoin existed, because there is the will for people to be evil and control the money, which we've just seen. Fiat currencies have never worked. Reserve currencies always get debased. So, I mean, we could run into this issue where everything is backed by Bitcoin, and you get issued a Bitcoin whatever token that represents a Bitcoin or a certain amount of Satoshis. So we could get back to that fractional reserve standpoint, but that protocol still exists and is always there, and you could always just get the Bitcoin.
Yeah.
So I don't know where we end up, but I don't think we really know until it happens. I don't think we're going to, so there's a lot of debate. Is it money? Like, what is it? And like we were discussing before, people aren't buying coffee for Bitcoin. So that kind of rules out the currency standpoint. Like, there's simply a better currency to transact in currently, but there is a great currency to save in, or a great asset to save in, which is Bitcoin, because it's finitely scarce. And I think we're going to transition into this. I've been thinking about it, and we're really far away from that currency standpoint where you're spending Satoshis for everything, because we don't know what its value is.
Yeah.
So
one of the apps that I bring up, or I've brought up too, is Zap, like the layer 2 solution. So we talked about, people will use Bitcoin for that store of value. Bitcoin right now around the globe, especially in developing nations, or nations that have gone through the fiat slide and inflation, hyperinflation, Venezuela,
it won't happen
Greece,
here.
Turkey. They've used Bitcoin as that. At least when I go across the border to flee from Syria, I'm not stopped at the border with my gold, because I can remember my Bitcoin address. So it's helped them as a store of value.
There's so many ways to save your Bitcoin. Like in that same exact article that Breedlove wrote, he talked about people publishing these articles with the encryption in these articles. So if you don't have to remember anything, you just have to remember how to uncrypt the article that you wrote. There could literally be work published right now that unlocks Satoshi's Bitcoin for all we know. No one knows, and no one can control it. And I think a very important part of it.
We've got some Chianti tonight, by the way. I just realized I said wine, Bitcoin, in a market update with Jack, and I did not actually introduce the wine.
It is.
I didn't mean to interrupt you there too, but no, I did have to display this. The Chianti, it's not too bad here, but
So
I'm sorry, continue, Jack.
I mean, one of the reasons why it's just infinitely better is just the transaction time. But I mean, I believe it's going to become like the most pristine reserve asset. So I think a lot of problems that we have right now is no one knows who owns what, and if something was to happen and they have to split up the collateral, I think you're going to have a lot of people staking their claim to collateral that they will never receive.
Yeah.
And Bitcoin really solves that in itself, and it solves the idea of war in itself. It's very peaceful. So if you think about how Hitler funded his war regime, he would invade said country, take their gold, use gold to buy more weapons and food and supplies, and continue raging war. With Bitcoin, you kill me, that Bitcoin dies with me unless I set up some type of trust.
They say Bitcoin is the first currency that you can take with you after you die. That's not true with cash. It's true with Bitcoin. That's why we always talk about how to store your keys in the right way. Hardware wallets. Get a hardware wallet. Trezor or Ledger. I'll leave a link in the comments after this where you can get a Trezor hardware wallet. Send your Bitcoin from the exchange to your Trezor hardware wallet. Make sure you watch a credible YouTube video. We have a tutorial at Adoption, or we're going to build one for you, so stay tuned for that.
Yeah.
We talked about Casa Wallet. Get an actual third party like Casa now to just be your solution in the event that you do pass away. Your loved one's not like, oh shit, what the hell do I do with all these passwords that
I don't know how to use them.
That Jack wrote down in all these secret little hiding places somewhere. So look into Casa Hodl. But this is important.
It is important because it's building like the financial security that people kind of need.
Be your own bank.
Like if you think about like the beginning of computers, like obviously I wasn't alive and existing on the internet when the internet first came out, but with the URLs and websites and talking to computers, I mean, computers are codes of zeros and ones, really. And if you look at these Bitcoin addresses, they're just numbers and letters. And at some point, we're going to find a way to make them more user-friendly. Like, just like we did with the computer, like how, you don't need to know how a computer works to go on the internet and search something. You don't need to know anything. You just need to know where the search bar is and how to use that.
Right. And
I think we're getting there. And I think it will take time, but I think people are starting to realize the use case of a finite asset in a world where everybody is debasing their currency. And really the outcome is that money, as we know it, fiat currency, is just becoming more and more worthless every day. And you really have to start thinking of where can you save your money in a safe place. And for me, that is Bitcoin, a little bit of gold, but I see it as being so superior to every other trade that I don't want to own anything else. Like I own gold miners and all that, but I mean, it would be cool if you could, there's the shared mining pools and stuff, but it'd be cool if you could go on, TD Ameritrade and buy a publicly traded Bitcoin mining company. But we as America are really slacking on that. And
one cool point I want to bring you back to that you said earlier that I've definitely talked about is truth. Truth in history. Bitcoin, what Bitcoin provides is for the first time in history, truth going forward, right?
Yeah.
Up until today, up until the blockchain, information has been passed down by word or written text, right? And that truth of that history is lost in time. But from today on, you can mint in history, like you're talking about, the opportunity for truth. What kind of impact do you think that's going to do from a political standpoint? Geopolitics is something we talk about. Well, Andreas Antonopoulos, for example, says there's going to be three currencies: the currency for governments, like we're seeing now with central bank digital currencies, the currencies for companies like Libra, and the currency for people like Bitcoin and Monero.
Yeah.
But where do you see that going?
That's a really good question. I mean, everything kind of circulates about truth, and we are probably from the furthest of truth at this point that I can imagine. And I think the first lie that I think we're kind of living in is that we live in a free market. And I think that's really scary for like the millennial future specifically, because I think a lot of people associate millennials with socialism. And I think that we're closer to socialism than we are capitalism at the moment. And that's because we don't have price discovery, free market truth. We have someone dictating who the interest rates are. We have a group of like 10 people trying to decide a monetary policy that fits millions. And they're really kind of playing God, and they really don't know what they're doing, really, at the end of the day. I mean, there's some history about, central banking and all that, but at the end of the day, they all end the same way. Because it just doesn't work, and people are greedy. And so I think that as we move towards this form of truth, I think life just becomes better. There's going to be more peace because people know what they're buying and what they're putting their life savings into, and they know that it cannot be manipulated by a human being unless, I mean, I don't really know. Because you talk about, like, you could talk about the theoretical alien or supercomputer, but in terms of the mining aspect, because of the difficulty adjustment, they don't get ahead of us. Like, even if they had some hash power that greatly far out, like, that kills whatever the humans can produce. I mean, there's already 18 million in existence. So that means there's only 3 million up for grabs. Not a lot.
Yeah.
So you could say, okay, you could run the thought experiment of some third-party entity grabbing the remaining 3 million, but that's still it's important, but it's a fraction of what exists. Right. And because of the difficulty adjustment, there's still only going to be 6.25?
Yep.
6.25 Bitcoin released approximately every 10 minutes, regardless of your technology. So it doesn't matter how strong your mining equipment really is. It's because of the difficulty adjustment. You can't change it. It's a protocol that will not be changed. And I think
difficulty adjustment for everyone that's listening, because the mining is something with the block reward. This is game theory that's built in. That's another part of Bitcoin that makes it different than anything else, is that Satoshi had known that this psychological portion of the Bitcoin protocol, game theory, where the miners are the ones that are validating the blockchain and keeping all these transactions secure. All you need to know from that is that there's computer power that's making sure that these transactions are actually real. And there's really a way for that to happen. And it's different from the systems now because it's way more secure than even the banking system. And it's way more efficient than the banking system. And it's way more efficient than MoneyGram or Western Union or like wiring payments and stuff.
You follow those like whale Twitter accounts where someone sends like 100 million in Bitcoin for like $3, and it gets approved. You get the first transaction within like 10 minutes, and you get like finality after like 90 minutes. I mean, you could argue how long it takes, but how long does it take for you to get like finality in the current banking system? Like,
you don't own the money.
You don't own it. Like, I mean, it's cleared on such a high level, but like, and I don't work in the industry, but I hear like with like the ACH deposits and all, like the ACH transfers, that's like 90 days for you to reach finality, where like within that period, like that money could just be pulled from you, and that's not a good way to do business. It's like we don't need instant payments, but we need something pretty close to it, and that will kill whatever we have right now. Yeah. And I mean, I'm fully putting my money and my hope into Bitcoin, and I think, I mean, if in terms of like the outcomes, where do you put your money right now as like a millennial? Statistically, we own like the smallest amount of the market at our age than anyone has had in history, because all the wealth is so spread out, mostly towards the top, but then the baby boomers all own a lot of it, and they're all expecting to sell it at these current prices when they retire, which is clearly not the case. So where do you put your money right now to not lose? I mean, you have interest rates at 0, meaning bonds are at an all-time high in price. Stocks are at an all-time high in price. Real estate is an all-time high in price, and it requires a shit ton of capital to even get involved in it. And then you have this new asset where it's like, what is the value of Bitcoin? Like, and nobody knows, because in a world where you value Bitcoin, the dollar has no value anymore, in my opinion. So it's like, how do you value it? Like, because everyone's thinking.
So when you hear about the $500,000 of Bitcoin or the $1 million of Bitcoin or $2 million, people don't factor in inflation with that, right?
Exactly, and I think at some point the people that say Bitcoin will be worth $0 is correct, because Bitcoin will be so valuable that it will be worth $0. You cannot. There's no amount of dollars that you could give somebody to get a Bitcoin from them, and I mean, you could call it infinite or 0, but in terms of that, I think that's where we're headed. But I think what people need to stop fixating on is price. Even though I do it myself, it just feels good. But it doesn't really mean anything because if you're that long-term guy where you're not selling for dollars anymore,
or gal.
If you're not selling for dollars, until we reach value, every trade is a winning trade.
Yes.
Like no matter what, as long as the dollar exists, as long as you can put your dollar into Bitcoin, you are making a winning trade.
And I think if you had bought over the long term,
I mean,
on average, you would have been up, right?
Yeah, I mean, if
you stack sats in dollar cost average, you're going to be up in the long run. You would have done better than buying any asset. The Robinhood traders, the young people, take those profits that you made off that free money in the stock market, start pouring it into freaking Bitcoin. What the hell are you doing? You would have made way more that way. Exactly.
And, I mean, there's all these charts of dollar cost averaging over a year or whatever and how much you would have. I mean, they exist everywhere. I can't come up with some fact out of my ass, but you get a lot more Bitcoin if you dollar cost average versus you dump at one time.
Yeah.
And it's very hard because there's the FOMO aspect. And is the price really going up or is it just fluctuating? Nobody knows. That's why you just dollar cost average, and you hope that you buy at the highs, and you hope that you also, or you don't hope that you buy your highs, but you hope that you get the opportunity to buy it on dips. And I think that is like a really important process, and just owning it and saving it. I mean, you're not going to outtrade some of these people, and you're not, if you're not in Bitcoin now, you're not going to become a whale, and you're not going to be able to change, manipulate the price and move the markets. So just keep stacking slowly. Keep
stacking.
And
keep stacking sats.
And I think, to follow up on where do you put your money? I mean, if you look at the S&P,
not financial advice.
Yeah.
What he does.
If you just look at it objectively.
We made the disclaimer.
Yeah, I mean, I'm a civil engineer, so I don't know anything about money.
I know, yes you do. Continue, Jack.
But the markets are like all-time high. You have like almost record high unemployment, at least in a very fast manner. But the gains are all driven by these tech companies, right? It's like, I don't even know where to begin. It's like the S&P is going up like 1% on like 80-something% of the companies with declining or they're either declining revenue or they're losing money at this point. And so that means like that's a red flag in itself. Where you have only a small bit of companies moving the indices that much. And like, I don't know, like Portnoy, he is a smart man because he knows how to manipulate the game. Like the game is stocks only go up for now because the value of the dollar is always changing. It's like we're not trading
unless you're Warren Buffett. Unless you're Warren Buffett and then you buy gold.
I mean,
Warren Buffett he bought gold last week.
So he's betting against the United States for like the first time ever. Yeah. But I mean, he's buying gold miners. He's not buying gold. He's buying gold miners, which are doing a productive
there's value
thing for society. So that could be his argument, is that they're doing something productive and gold is not productive. But I think what you need to realize is like during this wealth transfer, like, if you believe in that situation, holding the new reserve currency is the wealth transfer. There'll only be 21 million. There are 36 million millionaires in the world. You know how many Bitcoin Satoshi has and all these other whales. So there's a very small fraction of Bitcoin remaining for these millionaires to buy in. So you will be in spending wise a millionaire if you own just one. You probably be a lot more than that. No one knows what the value will be because the money supply is always going to change. No one knows how much money will be printed before everything switches. So.
Yeah. Well, it's good, man.
It's
moral of the story tonight is stack sats. We have the interest accounts that we talked about. Yep. We have the
get your money off Coinbase.
We got the KYC. That's
I got to listen to my own advice, but
elaborate on
I think it's tough. Finding like a safe e-wallet to keep your money in. But I always like to have something I can access on my phone. So I keep a small amount in either like Coinbase or BlockFi, Kraken, any exchange. Keep a majority of your wealth off of it for sure, because
not your keys, not your Bitcoin.
And
What that means is get a damn hardware wallet,
look what
put it in the hardware wallet, and then,
Get a
then have
hardware
the
wallet.
little change whatever you're gonna do on the side.
get
there,
a hardware wallet. Start thinking about multi-sig, which is Casa. There's another website I just read about.
Yeah.
They offer for like $1,500. They give you like $1,000 in Bitcoin, and then they set up your multi-sig with you on an online web conference. I can't remember who that was off the top of my head, but there's companies that are building that space. Multi-sig is very important because if you lose your keys, you're not completely screwed. There's always a little back door that you control.
Extra security blanket.
Extra security. But, I mean, if you need anyone to tell you to get your money off an exchange, just look up Mt. Gox and MT.
This is
GOX.
the truth. 2014, right? 13, 14.
They went from trading magic cards to trading the world's reserve currency, but they didn't know it.
Stories, man. So I think that's going to be it, dude. I got to eat.
Yeah,
this is good, though. So, wine Bitcoin market update from Jack. Jack, thank you so much.
Thanks for having me.
If the people want to find you, are we gonna let them know in the future here, maybe where you're at?
I mean, I'm
You'll
not
be a
that
ghost
important.
for now. That's okay. We'll let you know in the future when the Jack
I got the
is willing.
socials. Jack Kluz, JackKluz, Twitter, Instagram. I don't post anything on Instagram, so you don't need to follow that. But I do retweet a lot of stuff that I find interesting. Sometimes I tweet some other things, but I like to just kind of share side opinions on things that I read because I think there's a lot of valuable content out there right now, and a lot of it is on Twitter. It's a hive mind. So
we'll give Jack a follow. And again, if you want to get a lot of this content, the fastest way to get to you is through an email subscription. Go to adoption.io. Adoption with the B in the middle.
ADOB.
All right, everyone. Thank you so much. It was good seeing you. Great sharing this experience with you. And hope to see you again soon, which we will. Bye, Al.